Yo, and I think we're live. We're live on stream now. Welcome back, everyone. Very excited to have this stream. We'll discuss about markets. We'll discuss about the product and the updates that we've made. Couple of things. I mean, we'll first look at the markets, and then just some very exciting stuff coming up on the product side. So I think it's a very interesting point in the market here now, and we are in the wrong here. I mean, we're basically short from the mid range to up to now, and so that means we've taken quite a hit. I think as we progress, people will come to understand what's my style, which is a few trades. Especially in the range, like I don't want to take too many trades, and I usually take one or two trades a week. That means I allow myself to have very wide invalidation at times when I think it's relevant, and there are times where, for example, in uptrends, like I want to have clear invalidations and pullback, but when I'm in a range, that's where I allow myself to have a bit more breathing room. And I guess you can see this being reflected in the sizing to allow ourselves to have like enough breathing room so that we're not at risk. Like for example, I would have not gone, notional short full X, because otherwise we would have basically been, break even from our Chinese start. And so to me, like the way, because a lot of people now ask me, okay, what do you do? And so you can be very wrong, but if your sizing is correct, then you can have a pretty wide invalidation, which allows you to play this correctly. And so, I've been a big advocate that this is a range, and we've drawn this range for a long time. We actually have a channel now which is called Loose Circle. You have the link on the Discord, and we've drawn this range here. And if we look at the chart just now, this range was a bit wider, but we're pretty much at the top of the range. And so to me, the way, where we are now is top of the range. So if you're short, do you really want to close on top of range? I would say I did not manage to trade correctly because the initial invalidation was 68. Because I knew going to 68 it would push to 70, top of range, which was like 72, and where we are now. And I guess like few things came to me taking this decision of just holding through it, but it was mainly just sizing that made this comfortable to me. Like with my style, I'm happy to take some tight invalidations. Some wide invalidations on the trades. And so usually what this looks like is some big swings in UPNL, but that's how I'm able to basically do this challenge, because I can't look at markets so much, but I usually capture a lot of the move. And so the way I think about this now is first is your top of range now, and so if you hold through the top of the range, you're basically just wrong that we are range bound, and this is now this is an incorrect view. Like what you can expect now is a couple of things. Is basically just working through this area and then just break down coming back on the range, which would be very bearish. We'll just have an expansion now, and then potentially we head to 80K. And so you have to be very agile in this zone. And what this looks like is that we're going to break out of the range to the upside. And I think this is good news because this is going to allow us to take more trades on the alts. I do think that alts, like, should we break out to the upside, I do think there is a lot of potential there on altcoins. And so, yeah, we'll just have to be very dynamic because my invalidation can't extend beyond this point. So, we'll have to cut, like, basically anytime if we are able to close around this level. I think the way this was built up is, I'm not quite sure what's it's pretty hard to know. So one, to understand that it was really spot led, which is good to see. ETF are basically bidding pretty hard. I'm pretty sure we've got a Coinbase premium in here. So yeah, there we go. We've got a good premium on Coinbase, which had us squeeze a bit of shorts. The main question now is what's composing this open interest. Because if you look at the rise in open interest here, you basically had no drop in open interest through the short liquidations. So I'm wondering, like, when I looked at it this morning or today, I was like, I definitely don't want to open fresh longs, and I'm happy to miss out because of the built up in open interest. There's no way for me to answer and potentially I'm just mid curving this, but I don't want to open this in when the uncertainty are pretty high, and I'm pretty sure that if we are able to just stay there, you'll have a pretty sharp drop. I did mention on Telegram, one of the better ways we should have done this, I think, is to play this in long short, especially as we were mid-range. I was just comfortable doing it naked short because of the sizing. On my own personal account, I'm long short, but for this challenge, I still want it to be a bit more aggressive. But that's part of it. And I guess if I had to now just take like a fresh eyes, like assuming we start from zero, from sizing it, etc. I think we need to be very agile on those range highs, and then be able to, like, you're basically trying to predict where price is going to go. And I think, BTC could go to 90K this week, could go to 50K. No one really has a clue, but you just have to respect the momentum and respect the structure. So if we hold range highs, like, you just have to flip long with invalidation below the range. And if we lose the range highs, then you can go short if you want to. I haven't looked at markets at all, in fact, today, but we basically have strong reversion in the indexes. I understand crypto stocks are doing very well, so MSTR is doing well, which means we'll be able to press the ATM a lot more, which is going to be good for crypto reflectivity, and we could very well be on our bear market rally, which is always nice to see. I think you still have time to, like, how people lose most of the time is their FOMO. So, like, they are, I think, the challenge is 180 days, so like a year and a half. So I think we have ample time to just adjust, and if we miss on the trade, it's totally fine. I'm very confident in my abilities to assess and view other opportunities. So it's that is totally fine. I wanted to talk about asset selection a bit more here. For example, on my personal book, and as we are here on the challenge, actually, we're short near, and I wanted to discuss about a tool that we've built, and we've shipped that tool today, actually, is this capital flow and rotation. So what this does specifically is telling you what's the good assets to short based on certain criterias. And I've actually shared this morning. So this morning at 9 a.m. you had near, ENA, and hype as short candidates. And the way on this tool we discuss about add to short is when an asset that was previously strong is losing momentum. And it's typically what you need to add as a short leg. And so here, I'm bringing this up because you can be wrong on the direction, but you can select the right asset for that direction and still be okay. So for example, I was heavy naked a short near on my personal book, which is on Bybit at the moment. So it's not something you see, but it actually ended up being, I guess, one of the few assets that's negative on the day. So still end up being correct, and I was actually short hype as well. And the way I've discussed about this morning, but the way you understand this is that you have to strive in taking the weak assets as a short leg. ENA was also one of them. Actually, ENA was not a good example here. So maybe it was just a bit of luck here on the asset selection. So I encourage you to check this tool whenever you're looking for market momentum. So for example, Dogecoin is today seeing very strong inflows. So very strong momentum, but once the momentum stales, then you might want to allocate part of your short to Doge, because especially if we are in a range-bound environment, you need to take a view that every pump is going to be retraced, and obviously it's not correct if we leave that range. So definitely a tool that's, I think, important to use as long as we're in a range-bound environment. If we were to lose this range-bound environment, I think being naked short is very unwise, because the squeeze that you can see on alts can be pretty violent. So if I were to allocate again on a fresh positioning, I would actually do the same thing, which is you want to be short the assets that were previously strong. Like if we take the example of near went up pretty aggressively from the bottom. 40% was that actually the 40%, and so the market was basically in a range or dropping, and you had a lot of KOLs showing near, just like we had a lot of KOLs showing the ZR, or that was through that phase here, and you saw the drawdown after. So obviously this view is wrong if we leave the range, but I'm not gonna, I saw enough of this for me to understand that like this just might be a deviation, and I guess it's a high price that we're paying for this invalidation, but sometimes that's the way I want to operate, and that's basically sometimes just gut feeling on how I see things, but that's exactly why sizing is important. Is if I had taken too big of a size here, I would have probably got shaken out because I could have faced liquidation risks or anything. And here I'm totally fine with that. Not only on this challenge, but also just personal wise, due to the long short positioning. So the takeaway here is sizing is pretty important. And yeah, we'll update dynamically here on what we do, but you have to assume that I'm going to, like, if we don't see a sharp move down now, or in the coming hours, you have to assume it's not a range anymore, and then you want to be aggressively long with a super tight long gain validation. The point is, if this were to revert, that would be super bearish. But honestly, I have to assess the market a bit more. I have been, when you see where I'm streaming from, I'm not at my usual place, so I'm not really in sync with the market. But it seems like the markets now is discounting the Middle East conflict, and everything is just mean reverting, which is overall just great to see. Couple of updates now on the product, and I'm going to be sharing what we've announced today. So today we've announced a pretty cool thing, actually. I'm not sure if I'm able to show it to you guys. Yeah, no, I'm not. I think it would take a bit too much time to run the app locally, but we've created this, which I think is really interesting. Is I got this person to mention that paper trading engines lie about slippage worse than their ex, which I found very funny. And I think the point being that when you're on a paper trading engine, people would lie about slippage and not simulate an actual trading environment. And so the way we approach this is that every time you take a trade on the paper trading engine, so besides your, when you get a feel on a trade, you usually have a trade tab, and you can see there's an icon to inspect the trade, and you can inspect what was the snapshot of the order book at this specific moment, and then compare this to the L2 state of Hyperliquid. So there is this endpoint that's called L2 book on Hyperliquid, and then you can go back to the history of the order book so that we can prove that you got filled at the right price on our paper trading engine. And I guess pretty simple tech, but it's really good for the end user. And we're leveraging transparency as much as possible here. So that's one of the things we've added. We've also, on the docs here, we've added the API key auth so that now, and I can actually go to the beta environment now, but you can go ahead and grab your keys. So UI here is going to change drastically, but you can grab your key and then make requests directly to our backend through that API key. You don't have to go through the old flow we had, which was pretty unstable. So you can go to the API key on settings, grab your key, and then do all of that. We have the same rate limit as Hyperliquid, which is 1.2K requests a minute. And then you'll still have to go through the change. So you can go to the catalog and go buy a change, which will take you to Stripe. You can we've added this on the doc, but you can, you can put 4242 for all the digits, and then take the basically any number, and then you'll be able to process the payments, and then you'll have the challenge. You'll have a new challenge, and then you can take it from there with your trading bot. Don't pay attention to the UI so much here. All of that's gonna change quickly. We're making a lot of changes. You might like if you had looked at it yesterday, you see a lot of trades. Sorry, a lot of differences here. I can actually see that a lot of stuff got improved from yesterday, which is great. Now, if I put the trades, yeah, we see the position, which is cool. You also see the just like we have on Bybit and Hyperliquid. So that's making progress. That's going to be available to QA with the community towards, I mean, the next few days. So that's pretty cool, actually. Yeah, it's very cool. We, as I said, we've added Vladi, one of our front-end engineer. So things are going a bit quicker. So yeah. So that's one of the things that we've added. If you have any questions there on the bot, you can let me know directly, and I'm happy to help. We've got our own algorithms running on this. So if you really just have anything or you find any bugs, we will do our best to incentivize and to reward people that help us pretty early on. But if you want things to be improved on the docs or something's not clear, you can reach out to us. Yeah, we've released the article on the buy the dip article, which is helping you in assessing if something is losing a trend or if something is a dip that's worth buying. And yeah, I think that's pretty much it for today, if I'm not forgetting anything. So what we're working on at the moment is we're doing a big front-end push, making sure things are ready for community QA. So a lot of my time is spent on the interface, just making sure things are looking good. And then, yeah, stress testing the backend, adding functionalities like this L2 thing to like get the snapshot. And yeah, that's it for today. Again, I'm sorry for the setup here. I understand quality is not so good, and you got like some weird lights actually there, just see. But my commitment is to stream every day, so we shall continue. Irresponding of circumstances. So, no NCS. No, I'm not back in Dubai. I'm in Saudi Arabia now. I'm flying out of GCC very shortly. And I've been in Saudi for the last couple of days. The risk return of being in Dubai is pretty inexistent. I see no reason to be, in Dubai. I've got nothing to gain out of this. So yeah, but I want to go back just to lock in and be in the better state. Even like if I look at my trade analysis, I usually, although I don't trade a lot, I'm usually quite in flow with the market. So I know I have a good pulse for the market, but as soon as I'm not at the office, I just don't. I was comfortable there because sizing was very little. Although you can see the notional is high, like the margin used is pretty low. So I was happy with it. But I just want to go back to lock in and yeah, also yeah, one thing I forgot to add actually is we've crossed the amount of interest for the seed round. which is pretty cool to see. So we have a bit over 1.5 million, I think, in interest for the seed round, which is cool to see. That is definitely not an invitation to the seed round. I think a lot of people shouldn't invest actually. I like it is for certain people that have willingness to risk and to just invest early into things, but my goal isn't to get people to overinvest, and then I know how it feels to have people overinvest and then like be stressed out and all, but like people should just be willing to invest in, like, at the end of the day, crypto is super risky, etc. So that's not an invitation to buy into the seed round. I think most shouldn't invest actually. So yeah, a bit weird to say this, but that's honest answer. I've had a lot of people say, hey, should I put my savings into this? And I'm like, this is crypto at the end of the day. So that's not saying we'll do our best. We'll do our absolute best to make this work, but yeah, crypto is at the end of the day like insanely speculative. Anyway, on that note, I leave you guys. I have to go back to work, and then I catch you up tomorrow.